everyone, to the Trust the Plan podcast. I'm Nick.
And I'm Jim.
And Jim, last week was an exciting, feel-good edition, but this week, not so much.
This is like the regular edition.
Yeah, the regular
Keep
edition.
your expectations in line.
So at Peak Wealth Management, which is what we are, we believe that by providing education and guidance, we can help you retire with confidence, retire with peak confidence. And if you're new to the channel, please like the show. Please sign up for notifications. Please share with your friends if you find the content helpful. But Jim, today, so we have a chart on the television behind us talking about rich people.
Oh, man. It's always a great topic.
Yeah. So this is in the Wall Street Journal the other day. The U.S. economy depends more than ever on rich people. So what are they talking about here?
I think what this is going to is it's talking about, people don't realize how much of the economy is dependent on consumer spending. It's how much spending do individuals do, and that's what drives the economy. So I think where this article is going is talking about how wealthy people with higher discretionary income are doing the bulk of the spending, which is helping keep the economy going.
Yeah, I believe that the stats show that the U.S. economy is over 70% consumer spending.
Yeah.
It used to be less, but it continues to grow and be a larger percentage. But here we're seeing the headline says, the highest earning 10% of Americans account for almost half of all consumer spending. And they say that the income level to be in the top 10% is a $250,000 income level. So those top 10% are earning $250,000, and they're spending half of everything. So what do you think about that number of $250,000?
Yeah, my first thought on that is most people would probably be surprised and say, if I make or I'm close to making 250, I'm in the top 10%. I think most people would think that doesn't qualify them as a rich person.
Right. Yeah, I agree with that. But let's break it down a little more, okay? So if we look at the chart, it goes from 2020 till now, and so we see the line of the top 10% versus the rest. The savings was going up, or we say excess savings, which is spending. Okay, spending was going up. So here we have them moving up at the same rate, basically. And I think the interpretation there is that people had extra money due to the government handouts during COVID.
Yeah, stimulus checks.
Yes.
We always kind of suspected that to a certain point. So I think it's really interesting to see that come out on this chart where it appears that really could have been the case, is what this data has given us.
Yeah, and then at some point, it looks like at the end of 21, as we rolled into 22, that changed, and there was a big gap where the other 90% had much less. And so that seems to make sense with that same narrative.
Yeah, I agree. And also that was the time where we started seeing inflation really pick up pretty quick, right? So inflation hits people with less money a little bit harder, right? People that had money said, well, it costs more, it stinks, but I'm still going to buy it anyway. Whereas the other 90% said, it's too expensive, I can't afford it anymore.
Yeah, and the other 90%, they own less assets, as you said. They might not own the house, they might not have as much of a brokerage account, and they might have less savings and less investments in general, which tend to go up with inflation. And so that maybe their job, maybe they got a raise, but it wasn't enough to keep up with the 9% inflation that we saw in 22.
Yeah, and I think people have a way of feeling wealthier when they can look on Zillow and see that their house has gone up in value, and see different assets appreciate. So sometimes I think that affects spending behavior, even if you're not seeing it in the checking account. You still feel like, oh, I'm doing okay. My net worth is growing, and even if cash flow is not as good.
Okay, so here's some more information, because it's not just since 2020, right? This is just a couple of years on this chart, but there's more. Because over the last 30 years, it's been a trend that's continued. So 30 years ago, the top 10% were only spending 36% of all spending, right? So that's grown from 36 to 50%. I mean, 30 years is a long time, but we're talking about 14% of 70% of like 20 $5 trillion.
Yeah.
Okay, it's a huge amount.
Mm-hmm.
And so it's more, the stat tells us that it's more and more reliant on the higher earners. Okay, one thing that I would be really interested to see is if you break it down with like top 1% and top 10%.
Mm-hmm.
Because I think the top 1%, it would be even further because they're the ones, buying the second homes and the big yachts and the private jets and all that kind of stuff, right?
Right.
The top 1% or top 0.1. And, if you're making 250, you probably don't have all that extra stuff.
Yeah.
You know what I mean?
Yep.
So anyway, there's a lot of people, especially in politics, that talk a lot about these top 10% not paying their fair share and everything. But this directly shows that they are the engine behind the economic growth of the economy.
Mm-hmm.
I think that's worth mentioning.
Yeah, I mean it's kind of like a fact, right? Like without the spending of these wealthy top 10%, now we're talking about corporate earnings that aren't good and the economy's looking bad, and then it starts affecting everybody. So yeah, I mean, I guess take it for what it's worth, right?
Yeah, and the last point is over the last year. So in 24, the top 10% of earners, they actually spent 12% more year over year, whereas the rest of everyone else, the other 90%, were down year over year. Okay, so that means it's just continuing, the gap is continuing to widen. So any policies that have been out there trying to, what's the term that we use? Reallocate or redistribute. Like redistribute wealth, it's just not working. It just isn't. It's backfiring. So, whatever policies are out there, there's unintended consequences, I guess. But I found that really interesting, and I thought that maybe you would find it interesting as well. And if you did, please like, share, comment, etc. And we'll be around next week. And if you want to learn more about us, you can reach out at peakwm.com and schedule an appointment online.